I'm gonna need you to raise your glass. I don't care what you put in it. Here's the nights that you can't take back. We live hard, but we love to laugh. And we all thought that we'd get rich fast. Hopped the plane out for greener grass. Found out the greenest cash don't compare to the friends that last. See, we won't forget where we came from. The city won't change us. We beat to the same drum. No, we won't forget where we came from. This city can't change us. We beat to the same drum, the same drum. No matter where we go, we always find a way back home. No matter where we go, we always find a way back home. So here's to the cheap sunglasses, Red Bull and minivans, and people who had your back when the world didn't understand. See, we won't forget where we came from. The city won't change us. We beat to the same drum. No, we won't forget where we came from. The city can't change us. We beat to the same drum, the same drum. No matter where we go, we always find a way back home. No matter where we go, we always find a way back home. When time's losing and we're losing touch and fading away, we'll still be raising our cups to the same damn thing. Oh no, this city won't change us. 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 Won't change us. Hey! La da 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 da. La da 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 da. And no matter where we go, we always find our way back home. La da 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 da. La da 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 da. No matter where we go, we always find our way back home. La da 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 da. No matter where we go, we always find our way back home. We always find our way back home. Yeah, we always find our way back home.
Hello, David. Would you like to start?
Yes, yes. Sorry, apologies. We're having a little bit of trouble dialing in Francesco at the moment. So we'll start the webinar anyway. So good morning or good afternoon or maybe good evening to everybody, depending on where you currently are in the world. This is the latest in our global payment.
Do you hear something?
I don't hear. I see them, but I don't hear them.
Francesco,
Francesco.
Francesco, hello.
Excellent.
we have you. Welcome. So that was my next point was to welcome our panelists. We're very pleased to have Roland van der Stappen from Visa, Monica Monaco from Trustee EU Affairs, Ilona Marina from the European Banking Federation, and most recently, Francesco Gaetano from the European Commission to join us on this webinar, which is looking at financial inclusion in the context of the new European Consumer Credit Directive.
I don't hear them. I see, but I don't hear.
Okay, we're still going to work on Francesco's audio, but I'd now like to hand over to Greg Toussaint from Edgar Dunn & Company, who is going to moderate and lead the discussion. Over to you, Greg.
Yeah, thank you, David. My name is Greg.
I don't hear yet.
I'm a director at Edgar Dunn & Company. And Francesco, we can hear you very well. So if you can maybe just put yourself on mute for the moment, Francesco. So I'm a director at Edgar Dunn & Company, a strategic consultancy specialized in payments. We work on a global basis, on an annual basis in 45 countries, and we cover the entire payment value chain. Today, I will have the pleasure to be the moderator for this very interesting panel discussion webinar related to financial inclusion in the context of the new European Consumer Credit Directive. We'll basically have a look at the new European Consumer Credit Directive, focus on financial inclusion. We'll look also at the impact of the COVID-19 on financial inclusion in Europe, and we'll also touch base on the debt advice initiative. Before we go into the detail of the webinar and we start, I would like each panelist to introduce oneself, briefly, also mentioning the link with financial inclusion. Ilona Marina is a policy advisor, retail innovation at the European Banking Federation. Ilona, would you like to introduce yourself, please?
Yes, thank you very much and good afternoon, everyone. As Greg was mentioning, I'm the policy advisor at the European Banking Federation. And within the cybersecurity and innovation team, I coordinate the work on retail financial services and consumer protection and therefore financial inclusion. I also deal with COVID-19 related issues such as moratorium. And previously to the EBF, I've worked with the Luxembourg Bankers Association and the Generali Insurance Group.
Thank you, Ilona. Then I would like to introduce Monica Monaco, who is founder of Trustee EU Affairs, a regulatory affairs consultancy. Monica, would you like to introduce yourself?
Yes, hello, good afternoon, good morning, every of you, wherever you are listening to us. My name is Monica Monaco. I run my company, which is called Trustee EU Affairs. I'm founder and managing director. We are 10 people. We are based in Brussels, and what we do is following European regulation, especially on financial services and more particularly on payments. Before starting Trustee EU 7 years ago, I was senior manager regulatory affairs for Visa Europe. For 10 years and 9 months here in Brussels, and before that I was holding various positions at the OECD, at the Council of Europe, and in the private sector as a consultant, always working on financial services regulation. So I'm working now on financial services regulation a total of 23 years.
Thank you, Monica. I will also have the pleasure to have Francesco Gaetano, policy advisor at the European Commission. Francesco, would you like to introduce yourself? You're on mute. We cannot hear you at the moment. Would you like to start again?
Hear me.
Yes.
Yes, perfect. We can hear you very well now. Over to you, Francesco.
Okay. I don't hear you very well, but at least you can hear me, I hope. Anyway.
We can hear you very well.
Okay. If you can hear me, my name is Francesco Gaetano. I work in the European Commission since 2002. And I have always dealt with financial services and in particular with the consumer protection on financial services. I continue to do this work for various files of various or different nature. And in the meantime, I'm responsible for a project on debt advice. This is my short description.
Thank you, Francesco. I will also have the pleasure to have Roland van der Stappen, who is Head of Regulatory Affairs Europe at Visa. Roland, would you like to introduce yourself?
Thank you, Rex. I'm Roland van der Stappen, based in Brussels, and I coordinate our work with respect to all EU regulatory issues, including with respect to financial inclusion. And today, very much like to talk about the impacts that we see COVID-19 having on changing consumer habits, and then some of the implications that may have on the financial inclusion agenda more broadly than the Consumer Credit Directive.
Perfect. Thank you, Owen. So let's start our webinar. We have the pleasure to have Francesco with us, and let's start with the new European Consumer Credit Directive. Francesco, could you please explain briefly what is currently the European Consumer Credit Directive, please?
The European Consumer Credit, can you hear me first of all?
Yes, we can hear you.
Yes, very well.
Okay. Now, I'm sorry of this premise, but I have had various technical problems, and so I need to be sure that everything works. Verify this, the CCD, the Consumer Credit Directive, has a long story. It was born during the 80s, and in its first version, it was aimed to introduce a number of protection measures in favor of consumers. Then it was in particular the APR, the annual percentage rate of charge, which may put some order in the way consumers understood and were able to be aware of the fees that they had to pay, including interest rates. Then in 2008, the directive was replaced by a new version that had passed by a very long process to be adopted due to various controversial issues concerning a number of aspects. And this new version introduced other important measures, including in particular new rules on disclosure and advertising, a right of withdrawal, and the notion of creditworthiness assessment, meaning the idea that there is a responsible of the lender to establish if the creditor has the capacity to repay or not. This principle still is discussed because the creditworthiness assessment can be considered both from the perspective of the creditor, which means an analysis of the possible risks that he ran not to be repaid, and including the possible analysis of the guarantees, collaterals that can help him on the one hand, and on the position of the consumers on the other hand, that instead is focused on his capacity to repay the credit while maintaining a decent level of life. So irrespective of the fact of the possibility not to repay, but also repaying and remaining in good conditions. Let's say that there is a parallel legislation for mortgages, the MCD, that also contains a number of common rules, but there is an important difference between the two that concern the financial education role, that in the Mortgage Credit Directive is explicitly mentioned, but not in the CCD, where instead it is only mentioned the notion of a responsible borrowing, that is a sort of parallel idea as in respect with the responsible lending. The CCD idea is fundamentally not to guarantee a right to credit to the consumer, as somebody could think, but to write the possibility to access to a market that works well, that is sufficiently widespread and competitive in all over Europe, and in the meantime gives the possibility to the consumers to make an informed choice that is sustainable for his financial capacities. This is more or less what the CCD is, or should be, or have tried to be, let's say. Then, I mean, there are good reasons that we have identified to make some possible amendments to the CCD, but if you want to, we can speak of this later.
No, actually, that's a good transition, Francesco. Can you share with us what are the reasons underlying the new version of the European Consumer Credit Directive, please?
Well, the new version is, for the moment, we have simply identified the main problems, and so we have launched consultation through the inception impact assessment to understand from the stakeholders what do they think about these problems that we have raised. We have fundamentally identified four specific issues that should be reconsidered. One is that the scope seems to be inadequate. We have a number of possible types of consumer credit that are not included in the CCD. We, for example, the credits that are below 200 euros are not included, and we have seen that there are various products like the payday loans, some certain form of instant loans, etc., that are very expensive and are not included in the scope unless the member states have decided to include them. And so we are reflecting if it is the case to extend the scope also to include these types of credits that are below 200 euros and other form of credits that still are entirely or partially excluded from the scope. So we are reflecting on this, if other forms of consumer credit should be included in the scope of the CCD. A second point of this reflection concerns the content and the type of disclosure of information. We have two types of problems. One concerns the fact that the type of information is not perfectly tailored for the different types of information tools that are used. A common point is considered one of the radio advertising. Radios have raised this problem because they say that the current rules make them difficult to make this advertising while respecting the current rules of the CCD. And on the other hand, the current rules seem to be not perfectly adequate for the new type of for the fintech tools. I mean, for the way the tools of distribution that pass by the new digital means. They are the type of information rules seem not to be perfectly adequate for these types of tools. So also we are reflecting on this specific aspect. The third point that we are analyzing is the topic of the creditworthiness assessment, what I've mentioned to you before, and in general what can be considered as a sort of insufficient safeguards to ensure the principle of the responsible lending and the responsible borrowing. For the moment, the creditworthiness assessment is to be done through sufficient information. This is the notion that the notion that is used, and we consider that probably this sufficient information, this notion of sufficient information is insufficient in reality to ensure that the correct assessment of the capacity to repay of the consumer is ensured. So we are also reflecting on this specific point. And finally, we are also reflecting on the possibility to include additional to include the specific rules when exceptional situation or circumstances take place. We have the experience of the COVID-19, and this experience demonstrates that for the moment, in cases like this, there is nothing that is foreseen. So we also are reflecting on how to deal with these exceptional circumstances, what type of measures can be considered in this context. The review of the CCD is foreseen for the second quarter of 2021, as it is mentioned in the revised working program of the Commission. And I mean, there are two consultations for the moment. One concerns some questions on the CCD that are part of the broader consultation for the new consumer agenda, and the second one is the inception impact assessment that I mentioned before. In both cases, we encourage all the stakeholders to intervene and to give their opinions for to help us to understand how, in which direction and to what extent we have to amend and to change, if we need it, if we will need to amend and change the directive, and in which specific topics and aspects.
Thanks, Francesco, for underlying all the reasons. It was very clear. Indeed, having the input of all the stakeholders is important. Talking about stakeholder, Elon, I'm turning to you. What's the perspective of the European Banking Federation regarding the new European Consumer Credit Directive?
Yes, thank you, Greg, and yes, I hope you can all hear me well as well. From our perspective, so Francesco gave an overview on indeed what the CCD has been and possibly some thoughts about a possible future CCD. From our perspective, we find that the CCD is actually a directive that provides a very sound framework concerning the provision of credit and on consumer protection. Therefore, from our perspective and from our experience, the current directive is working quite well. Maybe to pick up a few topics that Francesco has also brought up and that have been a part of the broader discussion on the review of the directive. One of them has been, for example, the scope of the directive, so loans concerning loans between 275,000 euros. And from what we've seen so far, actually the scope is still quite relevant and it works quite well in terms of providing credit. We believe that probably the focus should be in further enforcing and clarifying the existing rules in order to make sure that all lending businesses are captured by the scope of the directive. Indeed, we believe that a better consumer protection would be ensured if all the players basically play the same rules. Another topic that has been often brought up is information and the provision of information. In that regard, we understand that actually very technical and very prescriptive requirements can be very quickly outdated. And we see that often consumers are overloaded with information that sometimes they might not even read. However, we believe that banks should be able to streamline the information provided to their consumers, and in a way that, with a modern experience, which is often preferred by consumers. However, in order to do that, a technology-neutral framework is needed in order to face not only the current technological developments, but also the future ones. So when we talk about debating on the review of the directive, we believe that some benefits actually might come from, as I mentioned before, further harmonization of the EU credit market, in the EU credit market, and we should, as I said before, ensure a principle is respected, which is the same activity, same rules, and same supervision, in order to also guarantee a better consumer protection. What we've noticed so far is that often gold-plating practices actually have prevented consumers from achieving the full benefits of the digitalization and the CCD per se. So what we would suggest is to actually ensuring that existing rules are enforced with no gold-plating practices, such as the request for a handwritten signature. I think we have all seen that often technology runs faster than regulation. So we would like to recommend focusing on a technology-neutral wording rather than trying to catch up with the always evolving technologies with sometimes limited results. Maybe as a last point, I would like to mention that it would be important to, especially now, have the a clear, bigger picture in front of us. Currently, human IT and commercial bank resources are all focused on the recovery on the economy and trying to help consumers to deal with the consequences of the pandemic. And therefore, any new requirement in terms of consumer credit should keep in mind a very thorough analysis of the impact of COVID-19 in the EU credit market.
Thanks, Elena. That's a comprehensive answer and covers a lot of different topics. Have you, from your perspective, seen any benefits or obstacles related to the CCD moving forward?
Well, I think, as I mentioned before, we should keep in mind that if we want to put forward a review of the CCD, these new requirements are coming in a time where COVID-19 has already disruptive effects in the EU credit market. And therefore, I believe that that should be kept in mind, and financial stability is an essential tool and is an essential aspect of the recovery of the economy. All these keeping also in mind all the costs that the banking sector has to face when we have to implement new regulations and new directive in a time where, as I said, all the resources are actually focused on the recovery of the economy.
Okay, thanks. And that's a good point, and we'll talk about the impact of COVID-19 on financial inclusion a bit later. And I'm moving towards Vulan now. Can you tell us, from your perspective at Visa, what's the perspectives of Visa and other payment stakeholders in the payment value chain related to the CCD?
Thank you, Greg, and I hope I don't fall away as I seem to have some Wi-Fi issues. I think maybe foremost important to kind of stress that from a Visa as a payment network, we are not subject to the Consumer Credit Directive as such. Obviously, credit cards are. So when we work together with our clients, we always make sure that these products are then subject to and adhere to EU legislation. Just maybe wanted to add a few observations. I think when it comes down to transparency of fees or consumer control, we see this is becoming a clear trend, and also where European fintechs and innovation can really address the issue. If you, for example, go abroad and pay with Revolut, you have clear transparency of FX fees. Also in an open banking, if you're going to move to an open banking context or in a context where payments will become invisible, consumers will still demand kind of some kind of transaction control. So a lot of innovation there is happening to make sure that when people spend with cards or with mobile, that they kind of can track their spend, and there will be a lot of budgeting tools still available, provided by industry. So I just wanted to say maybe there are broader the issues that were raised before are broader, go beyond consumer credit, like transparency of fees, transparency of information, or transaction control by consumers that can be addressed by industry and corporation with regulators. As I said before, I'll probably focus more on the other panels on the impact of COVID-19, since we're not subject to the CCD.
Yeah. Thanks, Ron. And transparency is indeed a big topic when it comes to credit. Monica, from your work at Trustee EU Affairs as a consultancy specialized in regulatory affairs, do you have some specific aspects that you'd think would be worth discussing for this new CCD?
Yes, so I've been working on the Consumer Credit Directive long time. I started to work on this when it was drafted. I was at the time at Visa, so it was 2006. And I remember very well the debate on the Consumer Credit Directive at the time, especially about the level of harmonization. So what we have now is a directive that allows indeed some gold plating, as Alona was saying, from member states. So when I discuss the review of the Consumer Credit Directive with my clients, the first question that comes up is the level of harmonization of the new one. If we have at some point, and this is still to be seen, for the moment we have the inception impact assessment. I understand we will have also the results of the evaluation published at some point during summer. But the next step, so there are four possible solutions that are outlined in the inception impact assessment, and one of these is regulation. So if the Commission goes for the new Consumer Credit Directive for the review, first level question we have, and my clients have, is which is the level of harmonization we will have. Would this be something similar to the first Consumer Credit Directive or not? Are we going towards a maximum harmonization or minimum harmonization? I.e., will member states be able to do what they like, starting using the text, or they will have to abide to some rules? But this is just in terms of, how prescriptive this would be. When we go to the content the questions we have are due to the time that have passed between now and the Consumer Directive. Consumer Directive was written in 2008, was published and finalized in 2008. So it was written in 2007. We are now 2020, 13 years later. In the meantime, it's possible to obtain a credit via digital device. There are products such as one click away credit, something that didn't really exist at the time. Also, there are lots of non-banks and other types of operators who are proposing credit products. And then there is data. There is also discussion about data. So which data can be used when assessing the creditworthiness of the entity which is borrowing money. And there is nothing in the directive about the current directive about which data should be used when assessing the creditworthiness. Now we know that in the meantime, it's possible, and some actors are already doing, to use, for example, social networks data to assess the creditworthiness of a borrower. And so how this assessment is made. We know that with AI, it's possible to have automatic credit scoring or automatic processing of data in order to have credit scoring. So responsible lending, that's for sure, as Francesco said, indeed, yes, responsible lending. What does this mean? Responsible borrowing, what it is. What is the duty to advise that the creditor has? But it's also, we have also questions about the means for assess this creditworthiness, because the means have changed in the meantime between now and 2008. Not to mention that the European regulation is also changed. So this creditworthiness assessment shall also comply with current rules, which are somehow different. We have, for example, the GDPR. We may have very soon AI regulation of some sort. So we are trying to understand where this leads, both in terms of digitalization of the directive, if we like, if we can say this, digitalization of the Consumer Credit Directive of some sort, and then second, how this then goes with indeed financial inclusion, and how this goes with the new products that are available in the meantime.
Thanks. And Mika, is it some of the key questions that you received from your clients, or I understand that you work with a wide range of clients. Well, what are the key questions they ask you when ready to CCD?
Well, typically credit scoring and how creditworthiness is assessed. What will happen to the amount that is, so that the minimum amount, the maximum amount that will be under the directive. We know that currently the CCD covers credit between 200 euros and 75,000 euros, and credit below euros. So questioning also what happens there. And then again, what happens at member state level? Will the directive be a maximum harmonization directive? Would this be a regulation of some sort? Because I remember at the time, the discussions about the level of harmonization took months and years. And in the end, we arrived to some form, the institutions arrived to some form of compromise because member states had different views about what consumer credit was. So this is fundamental. Most of my clients are international and they are working cross-border in Europe. So for them, any gold plating, of course, will not be great because we would like to have something uniform and harmonized. So on top of questioning the content, we're also questioning the form, which kind of form this will take.
You touched base on regulations, directives. This new CCD will also interplay with other European regulations. How do you think that the new European Consumer Credit Directive will play with other regulations like GDPR, for instance?
Yes, but GDPR is an obvious one, because if we look at Article 22 of the GDPR, this automated article in GDPR about automated processing, that the contract, such automated processing needs to abide to principles of ethicality. And so when we look at creditworthiness and how to assess creditworthiness in an automatic way, dealing with data which are out of automatic credit scoring, then Article 22 of GDPR comes to my mind saying, okay, so how these two will interplay, which data can be used, which kind of data can be used, and in which way, which would be we didn't have in 2008 because it was a different time. So any link between data and credit, I personally think has to be reviewed when thinking of the GDPR and the current framework we have.
Yeah, you're definitely right. There's the impact also of other European regulations, GDPR being one, that there are others, to make sure that there is overall compliance that need to be taken into account. So this is basically the first part of a webinar related to the new European Consumer Credit Directive that we wanted to touch base on. Let's now move to the focus on financial inclusion. This is like a significant topic to make sure that people can benefit from financial access. And if we look at past initiatives, from your perspective, Roland, what are the major initiatives, opportunities in the past few years that have managed to increase financial inclusion?
Maybe for both, like from a visa like perspective, financial inclusion means that everyone has access to digital payments, and like no one is left behind. And then if you then look at what has been really driving financial inclusion, is making sure that use of digital payment has become more widespread, and that has been the result and supported both by consumer behavior, technology, but also regulation by limiting the use of cash for certain under certain thresholds. We also see that across Europe there's still differences in terms of digital payments acceptance networks in those markets that have promoted that more and faster have to some extent less financial exclusion issues. So we very much approach it as an agenda to promote digital payments so that people can build credit records, can improve saving rates, have access to loans and other financial products. And at the same time, obviously, and that we can discuss that later, while we promote digital payments, we also need to make sure that we think about access to cash for at least for a transition for those vulnerable groups that continue to rely on it.
Yeah. Thank you, Ram. That's very interesting to talk about digital payments. Elona, at the European Banking Federation, have you seen any initiatives or opportunities that have in the past few years also promoted financial inclusion?
Well, indeed, from the banking perspective, financial inclusion has been at the core of the banking activities, and it has allowed also somehow to enlarge the pool of consumers that can have access to financial services and information. In that context, for example, the continuous efforts and heavy investments in the digital transformation of the banking sector has allowed banks to fully deploy their potential in allowing access to certain segments of consumers that are more at ease with fast access to financial services. For example, if we think of how easy it is today to open a bank account with a mobile phone within a few minutes and a few clicks, we have seen and that have attracted new generations, and therefore somehow also decreased the percentage or the numbers of unbanked in Europe. On the other hand, the very reticular presence of branches in the territory allow banks to reach those customers, such as, for example, elderly people that need personal assistance in daily banking transactions. That can happen for simply opening a bank account, or maybe receiving information or updated information on specific products that might answer to their very tailored needs. Generally speaking, I think we cannot talk about financial inclusion without mentioning financial education. And in that regard, we have both at the EU and the national level been promoting financial literacy as an essential tool that would allow consumers to have a more sound understanding of financial services. In that regard, we believe that financial education would put consumers in the driving seat and allow them to be better equipped in navigating the financial world, make better choices for them, and of course also protecting themselves. We are well aware that financial education does not substitute consumer protection. However, we strongly believe that financial education is a necessary supplement to consumer protection that would allow consumers to better understand the risks that they are taking when engaging with financial products, and hopefully giving them the tools to somehow mitigate them.
Thanks, Elena. And I think financial education, financial inclusion, consumer protection are key topics. If we now move towards the future, if we look at the future, from your perspective, Francesco, what could be the major initiatives that could reduce financial inclusion and in a way aim towards a greater financial inclusion?
Even considering the present before the future, the Commission has delivered not much time ago, not many years ago, the Payment Account Directive that was firstly addressed for financial inclusion, because the idea of that directive was to ensure that everybody, even those that are not interesting from a commercial point of view, can have a bank account, a basic bank account with the most important services, and this is fundamental either for their social and economic inclusion, because a bank account is fundamental for receiving a salary, for having the possibility to make payments, etc., but also in terms of their day by day education to deal with financial matters. On this point, I agree with Elona. A fundamental part of the financial inclusion is the awareness of the consumers as regards the way financial matters work, which, as correctly Elona has stressed, does not mean that the consumer protection in terms of legislation and of rules should be considered less. I mean, the two issues go in parallel, and both of them have their function. So for the present, we are convinced that the tools that the Commission has tried to put in place could help to increase the financial inclusion. On a more general point, I'm sorry if I become a little more theoretical, but an important aspect that should be understood is that in reality, it does not exist one single financial inclusion. We have different sets of financial inclusions, we could say, because there are different levels of knowledge and understanding of the products, different needs by different types of people, and for each of them there is a sort of step that has to be considered, and for each of them there is the possibility to better include, I mean, to give a better, a larger possibility for the consumers to access. For example, not because it is one of the most important points of the consumer credit, but the creditworthiness assessment is a tool that helps the financial inclusion, precisely because it helps consumers to make a good financial choice, even irrespective of their direct capacity to deal with it. And I can assure you that when there is over-indebtedness, when there are difficulties to repay, the financial exclusion that comes out is much, much worse than, for example, the fact to be denied a credit. So I see a different level for the financial inclusion, different levels of activities that are differently tailored according to the different types of products and the different types of clients.
Thank you, and I think you're spot on, Francesco, because there's a concept of financial inclusion, but then after we need to have a look also at the different cases in terms of like population. Is it like all people with potentially low salary, unbanked or underbanked, and understanding also the granularity of the different people and what actually financial exclusion means, then after to define the correct policy. From your perspective, Elona, and working also with a wide range of different financial institutions, what are the major initiatives moving forward that could increase financial inclusion?
Well, as I said before, actually, I'm happy that Francesco brought up the issue of the creditworthiness assessment and financial inclusion, because we believe that probably one of the qualities of the CCD is the flexibility in terms of financial inclusion, because that allows allows a consumer with different qualities and backgrounds to have access to credit. So we strongly believe that that's a quality that has to stay in the Consumer Credit Directive, because otherwise, if a consumer applies for a credit and is not accepted by a credit provider, that means that that consumer is not able to access to credit from none of the other credit providers indeed. In terms of looking forward, what will be the initiatives that would help financial inclusion, I have to say that I must come back to financial education, and it's a central role in indeed giving consumers the tools to not only better understand financial services with all the risks that are that have to be taken into consideration, but also somehow empowering them to make better choices and to better navigate this world.
Thank you, Ella. Roland, I wanted to ask you from like your perspective at Visa, looking at a lot of different European countries. Have you seen any major initiatives that will have the potential to improve financial inclusion in the years moving forward?
Yes, and apologies, I fell away again just before, so I missed part of the conversation. I think like one thing I wanted to highlight is these discussions around access to cash initiative that we are seeing in the UK, but we're also having these discussions, I believe, in Sweden, where I think it's important that like industry regulators sit together and kind of prepare for a transition to a cashless society, as we realize cash is still there to stay for some more years, for at least for vulnerable groups, and the free access to cash infrastructure will be hard to maintain for some of the banks. So we're trying then to look at innovative solutions, like, and that's where the cashback initiative comes in. That's the idea of when you go to a shop and buy something for 40 euro, you pay 50 euro, you get 10 euro back. We like to maybe expand it a bit further, so that you could actually go to a retailer and just withdraw cash. That's something that's for now not possible because of the PSD2, because that would require to be seen as a payment service, which is not the case. So there are some innovative solutions that can serve to help the vulnerable groups. Maybe another thing maybe we like to highlight is we also see an increased use of prepaid card solutions that kind of give both governments and vulnerable groups kind of the controls that they seek with respect to spending. We're happy to maybe touch on that in the COVID section.
Okay. Thanks, Ron. We have a look at the situation now, and Francesco, you mentioned that there's potential hurdles that may need to be overcome to reduce financial inclusion. From your perspective, what could be achieved in Europe in terms of, and which hurdles do we still need to overcome?
The hurdles could be considered from both directions. One is what still, as you ask, is a persisting problem, but also what we can see as the potential problems for the development of the file. In one case, I mean, what still can be considered, for example, certain cultural problems. I mean, I remember when the euro was introduced, there were a number of citizens that were considered in difficulty inherently due to their specific situation. For example, people living in remote areas, people that had not a good level of scholarity, etc. These are more or less the same categories that could have problems in being financially included, precisely because their attitudes are in a certain way not exactly in the line with the way the situation evolves. And this is a typical problem that we know quite well, that we have always faced from time to time and situation for situation. On the other hand, it could be concerning for the future perspective is the digital divide. The digital divide is potentially a problem because it concerns quite non-insignificant number of people that could have problems in dealing with the digital tools. And if the process towards the digitalization goes ahead and more ahead, these people could see this process in a problematic manner. And this is a good reason, for example, to be, I would say, a little cautious when, for example, considering to get rid of the cash.
Okay, thanks, Francesco. That's an interesting perspective. We talked about financial inclusion, credit worthiness assessment. Monica, in your view, what could strike the balance in the context of the CCD between financial inclusion and credit worthiness assessment?
Yes, thank you for the question, because this is the question in reality here. So I agree with Francesco about the digital divide, and I agree with what Elona was saying about avoiding people to go to payday loans, which are extremely expensive. And that's where the balance has to be struck. So in order to avoid precisely consumers to go to payday loan, then we need criteria for creditworthiness assessment, but these criteria have to be strict, but not too strict, because if they are too strict, then this will not allow financial inclusion. Because if these criteria are absolutely strict, and I hope that Elona would agree with this on this with me. If these criteria are too strict, then these people will not have access to credit and will have access to. And so they will look for credit in a non-regulated market, which may be much more dangerous, precisely for the people who need financial inclusion, who are not necessarily us here in this call, but the people who really need sometimes credit for living. So in my job, we call this the grace of compromise, and we could call this the fragile balance. Huh? So the fragile balance to achieve here, and what I hope, and I'm sure the Commission will do, is to achieve some balance between indeed having creditworthiness assessment criteria which are strict enough to protect the consumer, but flexible enough to protect these consumers from going and looking for a credit outside of a regulated market, which could be for them much more dangerous, typically accessing these payday loans offered or peer-to-peer credit or these kind of things. And that's where I think that the issue is. So it's a very fine balance. It's a very difficult task, but I am very confident for the job I do and for what I've seen this far that the Commission will solve this. But this is the question really: how financial inclusion and the assessment of creditworthiness criteria can be together to allow access to credit to whoever needs, and especially the people in need. So people who we are discussing when we talk about financial inclusion.
Elona, I think that you may want to answer to Monica. Do you agree with this fragile balance to be found, or what are your perspectives?
Well, as I was mentioning before, I believe that one way to, or one possible solution is indeed to keep in mind the essential aspect of the flexibility of the creditworthiness assessment. When we are talking about creditworthiness assessment, we have also to take into consideration the national specificity, the cultural background of the consumer you have in front of you. And that is possible only from the knowledge of the borrower that is actually running the entire process. So I understand it is a very difficult task, but indeed common indicators and having a standardized process in terms of creditworthiness assessment unfortunately will lead to financial exclusion. But it's the aspect of the flexibility that I believe will be a crucial aspect of including people and including consumers in financial services.
Thanks. Interesting topic about financial inclusion and the link also to creditworthiness assessment. Let's move now to the impact of COVID-19 on financial inclusion. And for the participants of the webinar, you can also ask questions in the Q&A box, and we'll take questions by the end of the webinar. So the COVID-19 is a huge sanitary crisis in Europe and across the globe. The sanitary crisis will be followed by a financial crisis. Roland, from your experience at Visa, what will be the extent, from your perspective, of the financial crisis in Europe overall?
So when we're looking at the impact of COVID-19, we're seeing a clear shift in consumer behavior, and believe that shift is permanent. Like it's a shift towards digital payments. I think we run some data recently and have seen that, since that now pretty much every country in Europe raised contactless limits. You're seeing 29 million more contactless transactions a week. So that is a lot. At the same time, we're seeing consumers moving online, and then e-commerce is up 25%. So from our perspective, these are permanent. That might be a permanent change. We also see that people who may have had a preference to use a cash, that was often more of preference rather than reliance, because a lot of people who use cash have also a card in their pocket. But at the same time, there's still a group of like vulnerable people out there that need to be catered for by innovative solutions. And something we have seen across different markets is there's an increased use of prepaid cards. For example, there have been so-called carer cards for the elderly that couldn't go out and shop and still wanted to have control over their spend. They could give a carer card to someone to shop on their behalf, and that was we could make sure that it's only allowed in certain merchant categories. For the same reason, governments, when social canteens were closed, for example, in Spain, also issued prepaid cards to vulnerable groups in south of Spain, so that they had alternative ways to do food shopping. We're seeing the same similar measures for more domestic tourism. I think overall, the impact of, if you look at the impact of COVID-19 on financial exclusion, we see there's an increased group that's now exposed and will use digital payment methods. But as I mentioned before, there will still be a few relying on cash moving forward, and that's why I think we need to have that debate. And now, how do we preserve access to cash, and who is shouldering the responsibility and the cost of that?
Mm-hmm. Thanks, Roland. And in a way, you're right. The COVID-19 has accelerated some trends on consumer behavior towards digital payment, contactless, e-commerce, or mobile wallet. Francesco wanted to ask as well, from your perspective, which impact do you think the COVID-19 will have on financial exclusion, especially given the context of the current or the upcoming financial crisis?
I think that the COVID-19 will have a very, very heavy impact at the economic level, economic and social level. And this consequently will have successive and further impacts at financial level. In particular, I guess that many people that whose indebtedness will become over-indebtedness, or that were already over-indebted and will be in condition to go bankrupt, to be no longer in condition to make any repayment. These people will unavoidably be financially excluded as a consequence of this situation. And this is a further reason to be, for our work on creditworthiness assessment, precisely because the impact of being over-indebted is worse than even the risk not to receive a credit.
And you're right. The impact of the COVID-19 crisis may have a big impact, unfortunately, on financial inclusion. Roland, from your perspective, do you see the impact of the COVID-19 being the same across all countries in the EU, or do you feel that some countries will actually be hit harder by the upcoming crisis?
I would say the impact is different in different countries, and there we've also seen again that Southern Europe will be hit the hardest, because they have also had the restrictive measures longer than Northern Europe, and they may have also an impact on people's own financial situation, as Francesco mentioned. So that's maybe on the macroeconomic side. And if we look at what does it mean in terms of changing consumer behavior and the shift towards digital, we see that at the same time that's the biggest in Southern Europe, because there people were still most reliant on cash, and that's also where we have had most of our partnership arrangements with governments.
Yeah, thanks. And from this analysis of a potentially greater financial exclusion, Francesco, in the light of this COVID-19 crisis, which initiatives should be introduced to help the financially excluded? I think the CCD will contribute toward that.
The revision of the CCD could contribute, but more specifically, a specific point of this revision could contribute. As I mentioned during when I described our action, the fourth point on which we are reflecting is precisely the lack in the current text of specific measures that are aimed for this kind of exceptional circumstances. We are reflecting in order to find a way to help resolve or at least mitigating the impact of these situations when special cases like the COVID happen, and this is one of the points we are working. In addition, I can quote an initiative by our colleagues of DG FISMA. They have organized a number of meetings of the stakeholders in order to discuss with them directly what type of best practices on a totally voluntary basis. I mean, this is fundamental to stress, but what type of measures based on their goodwill banks or insurances or in general financial actors can accept to take in order to help their clients that are in difficulty to pass this bad moment. DG FISMA will publish this set of goodwill voluntary best practices in the next coming days, and we have strongly appreciated this goodwill by these stakeholders.
Good. I'm sure that will be something that is of interest. Elena, do you want to comment as well on what initiatives could be introduced in the future?
Yes, maybe just to quickly mention about the best practices. What I would like to say is that actually, certain initiatives and topics that are mentioned in that document, they have been already implemented at the national level for now, I believe, 3 to 5 months, and it appears that they are running quite well. In terms of specific maybe initiatives. I have to say that if the numbers of the infected people by COVID it looks like is decreasing, at least in Europe, the full consequences of the pandemic from an economic point of view actually need to still unfold. However, during these times, banks have stood ready with their clients in indeed ensuring that there is a certain access to credit, and all this in providing safety nets for both clients and people employed within banks. Financial inclusion remains one of the main topics, especially due to the consequences of the pandemic. And during especially the strict lockdown, banks have increased their communication tools towards consumers, remote communication, of course, so online and phones, in order to guarantee that there is still a certain access to credit, and that consumers could be provided with any type of information. Not only that, but indeed with the aim to prevent financial exclusion, we have seen that at the national level, both private and public moratoria schemes have been deployed in order to help consumers that are facing specific financial difficulties. These consumers can rely on the postponement of payment schedule when they are facing, of course, financial difficulties. And from the data we gathered, the majority of the member states have included consumer credit in the remit of the possible credits eligible for these moratoria. So in that context, financial inclusion remains an issue of great importance for the banking sector, especially in light of the disruptive effects of the pandemic.
Thanks, Elena. That's indeed a good point. We talked about cash before. Roland, I wanted to ask you, from your perspective at Visa, is there a viable alternative to cash in this context? You mentioned that the usage of cash is decreasing. With a lower volume of cash, there's still some significant fixed cost. What could be a viable alternative from your perspective?
I think that is important to understand why certain people still use cash, whether that's an issue of preference or reliance. And if we've done some research on this, and we understand that one of the main drivers here is budgeting, security, and privacy. So as I mentioned before, therefore we think it's important, especially if we're going to move towards a society where payments will become invisible, that you still have easy to use consumer friendly transaction control system, so that you can track your spend and can manage that on a regular basis as you want to, with respect to privacy. Therefore we think it's important to continue to invest in security. For example, moving away from the chip and pin to biometric solutions or tokenization for mobile payments will also help certain vulnerable groups, because there is a group out there that, for example, doesn't fully benefit from card payments, because people with cognitive disabilities or physical disabilities may struggle with, for example, for PIN codes. So having innovative solutions there also serves those people. But having said that, again, we still think access to cash will stay important for a few more years, and it's important to both keep on innovating to kind of meet the concerns of the vulnerable groups and cater for them, but also thinking about how do we maintain free access to cash in an innovative way. And that's where I think cashback initiatives will play an important role across European markets.
Yeah. Thanks, Roland. Elena, the banks are one of the actors in the value chain providing access to cash. What is your perspective regarding a potential viable alternative to cash?
Well, previously, indeed, some tensions between cash and digital payments have been already mentioned. But generally speaking, we have seen that due to the pandemic, cash have been seen somehow as a possible vehicle for the spread of the virus. So we find that the pandemic has markedly affected the use of cash. And a recent report, I think, has also stated that COVID-19 will speed up the use of other digital payments. From our perspective, we find that the heavy investments in the digital transformation of the banking sector has allowed to come up and develop very fast, innovative and user-friendly digital services, which has led to the development of an increase in the digital payments that is used by consumers in their everyday life. We also have noticed that member states have come up with measures to incentivize the use of digital payments. For example, in some member states, consumers are allowed to pay with at least one digital payments beyond cash, so it can be payment cards or instant payments. Coming back to a bit like financial inclusion and the use of cash, you know, banks aim at servicing all type of customers, despite their digital activities of any specific consumer. However, we should keep in mind that through the development of digitalization, there might be certain tensions and clashes between the coexistence of cash and digital payments. So on one hand, we see banks that provide services to consumers that maybe are a bit hesitant or have difficulties in approaching digitalization and therefore digital payments. And on the other hand, banks are also requested to make heavy investments in developing new means of electronic payment. So to answer your question, there can be a viable alternative to cash. However, it should be kept in mind that banks have to find somehow a balanced, sustainable balance between consumer demand for cash and personal assistance, and the need to develop new digital means.
Okay, thank you. So we have only 10 minutes left. Let's cover briefly the last part of our webinar before going, because we have quite a few questions. Debt advice initiative launched by the European Commission. This is directly linked to financial inclusion. Francesco, could you tell us more and describe the current project of the European Commission on debt advice, please?
Yes, this project is formed of 3 different actions. The first action is a study on the funding of debt advice. We want to know how many resources are needed in order to, let's say, guarantee, or at least try to guarantee to as many European citizens as possible the availability of this service, in which we strongly believe, because, I mean, after a number of studies and of verifications, we have seen that debt advice is one of the most effective tools in favor of the consumers, of the households, of the people, the citizens that are over indebted, but in the meantime help the creditors to recuperate in a feasible manner their credits. So we think that this service needs to become available as much as possible, and therefore this study will analyze how much money is needed, how many resources are needed in order to allow the Commission to take a decision to what, if and to what extent, we can, in case, contribute. The second part of the project will be 2 events of exchange of best practices. The idea is to organize in Brussels 2 events where experienced debt advisors come and explain what they do, what they have learned in these years, and explain this to a number of auditors, of people that come from other countries and or do not have the same experience. So this exchange of experience can become a way to make it widespread, this type of knowledge. And the third set of actions will be 2 events in 6 member states, which means 12 events, where there will be some financial capability, some, let's say, transfer of expertise, capacity building. I mean, the idea is to take a number of expert debt advisors who teach directly to a number of possible future debt advisors located in 6 countries where debt advice is not developed sufficiently. So we have identified 6 countries, and in these 6 countries, the 2 events will take place where people coming from countries where debt advice is developed will explain and will teach in a way what they know to the people of the countries where debt advice is not developed.
Okay, so thanks, Francesco. 3 sets of actions and a very clear agenda. Elona, very briefly, because we don't have much time, could you share also the position of the European Banking Federation on over-indebtedness and debt advice?
Yes, what we see actually from our experience is that the concept of over-indebtedness and therefore the role of the debt advice, but especially over-indebtedness, is a very complex and multi-phased social phenomena, which is linked to cultural, economical, social, individual factors. And therefore, keeping in mind that we are talking about a subject that is linked to social and cultural habits, we have seen that at the national level, several actions, actually several effective ad hoc initiatives have been taken place. Data advice is one of them, but not only. There have been different initiatives which aim, for example, at growing the awareness and the information to consumer advisors, or allowing consumers to have free legal service via specific centers for borrowers. In this context, we have also seen at the national level extensive changes introduced at the national level in the context of the responsible lending agenda. And from a lender perspective, we actually acknowledge the benefits of implementing such a model, given that it ensures that the costs of over-indebtedness are actually quite minimized. But generally speaking, from a creditor perspective, preventing over-indebtedness is a shared interest, because it affects consumers' life, it affects banks' balance sheets, and therefore NPLs, and at the end, the health of the economy as a whole. What we would like to highlight, however, is that bank advisors are not the only initiatives that can be taken place, and that several aspects, specific aspects of the consumers should be taken into consideration. As I said, it can be economical, it can be cultural, it can be specific habits that consumers have. And maybe the final point is I would like to stress again also the role of not only a proper creditworthiness assessment, as we mentioned before, but also of financial education, because that would indeed help consumers in build a certain capacity to manage budgets and to make better financial decisions.
Monica, in a couple of sentences, your views on the matter?
Yes, I mean, I agree with. Yeah, I agree with what has been said. So I am very happy and proud of the initiatives that the European Commission is taking. You know, I am a fan of the European institutions since a long time, and I think the work they're doing in this area is absolutely fundamental. So all the seminars and then the events that are going to take place, I think they're very important. And I agree also with Ilona that yes, indeed, it's also a matter of financial education, and having the financial education in place, and then also having a definition of what it is responsible lending that allows lending while being responsible. Because again, in the absence of lending will create more issues than for people who need financial inclusion and debt advice than they have already. So I think that the Commission initiatives are extremely relevant and very important and very welcomed, and fundamentally important for the society. And I also
I think that I'm not sure if I can hear you, Monica. We'll just maybe take the question from the audience, because we're reaching the end of the webinar. Francesco, there is a question for you from the audience. Compared to other countries and their financial regulations or policy, is there any regulation / policy that EU should adapt to? So quite a broad question.
I don't understand, to be honest, what this type of question. You mean urgent measures that should be taken immediately, something of this kind?
I'm just sharing what is the question of the audience. So the answer could be the question is too broad, and if you want, maybe the person who asked can be maybe send you a bit more detailed question per email, if it's okay with you.
I have to reply on what is urgent. I think that the initiative taken by DG FISMA that corresponds to initiatives already taken at national level in order to face the most urgent impact of the COVID-19 probably is an important reply. I mean, we need to face these economic difficulties that stem from the COVID-19 and the impact that COVID-19 has had on the economy. So this is my reply. I mean, we have tried to act as soon as possible, we are using a tool that is not a mandatory one, but is based on the goodwill and on the voluntary approach by the providers. Ilona has confirmed that these initiatives, at least at national level, are already there and are working. So I think this is something quite urgent, and I think that the institutions at both national and the European level are active, have been active to respond.
So thank you, Francesco. So we reached the end of the webinar. If you have other questions, I think myself or the participants will be also, panelists will be very happy to answer. Let's have a quick word of the end. We'll go through all of the panelists. And in 2 or 3 sentences, what is your vision for the future in terms of financial inclusion? And what could we expect? Elena, would you like to start?
Just to break the ice. Well, I mean, several topics and issues have come out during this discussion, but I believe that in view of COVID, in view of the current and always undergoing developments in terms of technology, and in view also of how financial services work and how financial products are and their complexity. I strongly believe that financial education should be one of the priority in terms of helping consumers to being informed first of all, and of course also having access to financial products and services.
Okay, thank you, Elena. Monica?
Yeah, as already said, thanks for letting me say this. So again, as I said, for me, financial inclusion is about finding a way to allow any assessment of creditworthiness to allow still access to credit. So if we have to resume financial inclusion in terms of European directives, for me, financial inclusion is about the PAD, so Payments Account Directive, so access to accounts, but it is also about access to credit. And this is what we're discussing today. So how to assess the creditworthiness is fundamental, together with financial inclusion, for financial education, and together with responsible lending. That is a very important part of this discussion in order to avoid that people who need financial inclusion go and look for credit outside of the regulated market.
Okay, thank you. Roland, briefly.
I think we've actually lost Roland.
Yeah, we have lost Roland. Francesco, the word of the end?
I strongly agree with both Monica and Elona on the points that they have raised, but I am a little more optimistic as regards the positive role of a good creditworthiness assessment in terms of financial inclusion. As I mentioned before, it is much worse for a consumer to be over-indebted in terms of his really not only financial but a general exclusion from the life, from everything of the life. When you are over-indebted, really you enter in a situation that is a tragedy. So from this point of view, a good creditworthiness assessment as a principle, as a matter of principle, I don't see as a strong trade-off with the financial inclusion from that point of view. I see that probably these two notions can go ahead together in agreement among them. They can do more or less the same job, although towards two different perspectives.
Thanks, Francesco. That's a very good conclusion. Thanks all for joining the webinar today. We talked about the new European Consumer Credit Directive, financial inclusion, the impact of COVID-19, debt advice. I hope that you enjoyed the webinar as much as I did, and I wish you a very nice day. Bye-bye.
Thanks, Greg.
Thank you for your attention and your time.
Thank you for listening to us. Thank you.
Thank you. Just to flag up our next webinar, which is next week on the 15th of July, looking at a very different subject, which is crypto asset regulation. You can find full details on the website, which is europeanpaymentsummit.com. And just to wrap up, thanks again to Monica, Elona, to Francesco, and a special thanks to Greg for his expert moderation. And see you next time. Thank you.
Thank you.
Thank you.
Thank you.